Interest rate hikes are off the table after inflation shows signs of slowing. The housing market splits into two, with the smaller capital cities soaring as most of the rest of the country sags. And Rio Tinto kicks off reporting season with a bumper $9 billion half-year profit. Welcome to Fear and Greed Daily Business News. For people who make their own decisions, it is Thursday, the 1st of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Love August. Few reasons. End of winter. Reporting season kicks off, and finally, sort of the news cycle picks up a bit. It's very exciting. Big day today.
Oh, it certainly has picked up today, hasn't it? The main story this morning is a cracker. Slightly weaker than expected inflation figures have alleviated fears of another interest rate hike and raised hopes of a cut early next year.
Investors and the consensus among economists is that the next move in interest rates will be down, probably sometime in early 2025. Australian Bureau of Statistics data released yesterday shows that inflation for the June quarter came in at 1% and 3.8% for the full year. The annual figure is a slight uptick, but it was expected given the higher costs of rents and fuels and things like that. The all-important trimmed mean, which removes volatile items, it's the one that the Reserve Bank likes to think about. It came in at 1% for the quarter as well and 3.9% for the year. That was actually slightly lower than expected. When the Reserve Bank Board meets next week to deliberate on rates, any number higher than 4% for that underlying rate would have put pressure on them to hike interest rates. But of course, that didn't happen. Housing, including rents, is driving prices higher, as are services like health and general insurance and education. But economists pointed out that heat appears to have come out of services inflation. We've been talking a lot about that. It has been slower to fall, but it just seems to be calming a bit. The bond and currency markets reacted swiftly to the inflation figures, with the Aussie dollar dropping below 65 US cents, while the 3-year bond rate also fell. Markets had priced in a 20% chance of a rate rise ahead of the 11:30am announcement next week when the Reserve Bank Board meets. By the end of yesterday, that actually priced in an 8% chance of a cut. Not much, but a flip-flop. While the consensus is that the next move in the benchmark interest rate is down next year, some economists, notably Westpac's Lucy Ellis, who until recently was the central bank's chief economist, thinks it might actually occur in November.
Early highlight for me so far today, Sean, your use of the term flip-flop.
Flip-flop. I actually like the word sags. You said sags in the intro. I like that one. Flip-flop, sags.
Oh, gosh, we're on a roll.
Yeah.
We are on a roll here today, Sean. Now, do you think the Reserve Bank will be relieved by the inflation figures yesterday?
Absolutely. Inflation remains too high. It's sticky, so to speak. But further rate hikes could well tip the economy into recession, and that's not what the central bank wants. While the employment market has remained remarkably resilient, unemployment is trending higher, no doubt about that. There's been a sharp slowdown in the retail sector and in the construction sector. The number of insolvencies hit a record last financial year. On a per capita basis, we are in a recession already. We know that, even though officially the economy expanded at just over 1% in the 12 months to the end of June. As I said, the Reserve Bank doesn't want to put the economy into recession. The inflation figures show that price rises remain too high, but the trimmed mean measure now gives the central bank a reason not to move on interest rates. Good day all round.
Yeah, indeed. And you get some great insights, some great analysis after the show. You've got an interview coming up with Gareth Aird, Head of Australian Economics at the Commonwealth Bank.
I sure do. He is another person who thinks that the first cut might be in November. So when you've got the Head of Australian Economics at the Commonwealth Bank and the Head of Economics at Westpac both talking late this year, I think we probably should put some merit in what they're saying. So it's definitely worth listening to my chat with Gareth.
Yeah, he is fantastic to listen to on all of these things, and we love talking to him after any of this data comes through because he really does just put it into plain English as to what the outcome might be. Now, how did the share market respond to the inflation figures?
Oh, they loved it. They're very excited about the idea that there won't be an interest rate hike next week, and the S&P ASX surged 1.8% to close at 8,092 points, a new record, regaining all those losses of recent days. Some of the interest rate sensitive stocks did best. Consumer discretionary groups like Wesfarmers, JB Hi-Fi and Harvey Norman all did well. The banks did well, led by Westpac, which rose 2.5%. National Australia Bank and ANZ both jumped around 2%. Commonwealth Bank was up 1%. Tech stocks outperformed with Xero, REA and WiseTech Global all doing well. The energy companies also did well. as oil rallied following unrest in the Middle East. More on that shortly. A strong performance by Rio. We'll talk about that one later too. That pushed up the share prices of BHP and Fortescue Metals, as well as the company itself.
And what about international markets? What's happening there? More broad. It's a very broad question, isn't it? Just what's happening in the rest of the world, really.
Yeah, well, plenty going on. China's manufacturing activity fell for a third consecutive month in July, according to an official survey, increasing pressure to speed up stimulus measures to boost the world's second biggest economy. China's Politburo this week called for faster implementation of a stimulus program, and the central bank has cut interest rates as the government tries to meet its economic growth target of 5% for this year. Very important for the global economy, but especially the Australian economy. Now, in Japan, the central bank lifted its benchmark interest rate, said it would lower bond purchases. Now, Japan, among the major economies, has had one of the most accommodative or ultra-easy monetary policy stances. So it hiked rates yesterday to 0.25%. So we're not talking about restrictive monetary policy here. Anyway, it's had easy money for a long time. It's starting to change on that. On Wall Street, Nvidia's shares tumbled 7%, most since April, and the group has now lost 23% of its value in 3 weeks. It was the main reason the Nasdaq lost 1.3% yesterday morning, while the broader S&P 500 closed down 0.5%. Not helping was a disappointing result from Microsoft, and I'll tell you about that later in the bulletin as well.
Something else that's coming up later, Sean, when I say later, I mean a fair bit later, at midday, is the next bonus episode of Ask Fear and Greed, which is the podcast, a short podcast. It's only 3 or 4 or 5 minutes or so, where we take listener questions and answer them, or I ask you and you answer them. And today we got a great question coming from Duncan. And I won't spoil it, but it gets into politics, it gets into economics, it gets into all kinds of things. And it's a really fascinating one. And we had a good question earlier in the week as well from Joey about the ASX 200 and what the index actually means, what the points actually refer to. We've had a bunch of great questions come in since we started this a few weeks ago. So if you've got a question that you would like us to answer, it can be anything about business, the economy, anything to do with finance, really. Send it on through via Facebook, Instagram, LinkedIn, or the website fearandgreed.com.au, and we'll pop it on the list to answer it.
Yeah, and I like this question today. Well worth a listen, this one.
Yeah, it's a cracker. It's coming up at midday. Fair bit to get through before that, though, Sean. We'll be back in a moment with the rest of the day's business news. Sean, national home values rose by 0.5% in July, the 18th consecutive month of increases, and prices are more than 13% higher than early last year. But it isn't all good news.
No. The Australian market is now split in two, with Perth, Brisbane and Adelaide soaring, while Melbourne, Hobart and Darwin are struggling, to say the least. That's according to CoreLogic figures. Sydney is sitting somewhere in between. House prices fell during the last 3 months in Melbourne. Now in Sydney, they're up just 1% during that rolling 3-month period, much slower than the 5% pace this time last year. CoreLogic's research director Tim Lawless says it's clear momentum has come out of the market in most cities. It's a supply and demand story. The cities where supply is below average, that's Perth, Brisbane and Adelaide, are the cities where prices are soaring, and vice versa for the struggling cities. What's interesting is affordability problems are really kicking in. The fastest growth across the nation over the past 3 months comes from the lowest quartile of house prices. So we're talking about the cheapest house prices where you're getting most growth. Price growth among very expensive homes is much, much lower. Also, unit prices are now rising faster than house prices across most capitals, with the exceptions being Darwin and Capital. That also reflects that affordability factor. A lot going on in the market, really fascinating to watch.
Now, I mentioned this one at the top of the show, Sean. Rio Tinto made a net profit of nearly $9 billion over the 6 months to June, but rather than boost dividends to shareholders, the country's third largest miner will spend more on growth projects.
The $5.8 billion US dollar profit was close to expectations and up 14% on a year earlier. It was driven by improved earnings in its copper and aluminium operations. Its iron ore business, though, well, that's the breadwinner, although the segment's profit was down 10% on a year earlier. Boss Jakob Stausholm said the company was consistently very profitable and growing. The dividend of $1.77 US a share is slightly lower than expected. though. It's still the fourth biggest interim dividend in the miner's 151-year history. The money it's saving, or the money it's not giving back to shareholders, will mostly go on investment. Rio's share price closed up 2% yesterday.
Sean, about 600 jobs are at risk at troubled airline Regional Express after the company's shares were suspended yesterday and flights between capital cities cancelled.
Workers were told the business that services 737 flights in capital cities will cease to operate and 360 jobs will go. Another 250 jobs are at risk on regional routes, according to the Financial Review. Both Qantas and Virgin have committed to pick up as many jobs as possible. Federal Treasurer Jim Chalmers yesterday stopped short of agreeing that the government should take an equity stake in Rex. Others in the industry said the crisis at the regional airline should be a catalyst for reform. A white paper into Sydney Airport, for example, that's well overdue. That's a federal government white paper. It's well overdue. Sydney Airport Chief Executive Scott Charlton was out yesterday talking about Rex's demise. He said it demonstrates that we need to change some things in the Australian aviation market for competition to thrive because recent history suggests the barriers are too high.
Sean, you had some interesting things to say in yesterday's newsletter, the Fear and Greed newsletter, which comes out every Wednesday, just about the importance of Rex to regional Australia and really why maybe this is a case where there should be perhaps additional support.
Yeah, I'm not a great believer in government intervention, particularly into listed companies. But in this instance, it's happened before. So it happened in the banking crisis when there was definitely government intervention to help to help some of the smaller banks and pressure some of the larger banks to take over the smaller banks. So it does happen sometimes. And I think, in terms of transport and airlines in regional Australia, that's somewhere where the government does have a role to play.
Yeah, there were interesting comments. And if you haven't signed up for the Fear and Greed weekly newsletter, do so at fearandgreed.com.au. Now, the federal government will accept 130 out of 172 recommendations in principle, but only 13 in full of the Disability Royal Commission's findings.
The Albanese government will focus on improving job pathways for Australians with disabilities as part of a broad $371 million package that comes in response to what can only be described as harrowing stories that emerged from the Royal Commission. Now, according to a report in The Guardian, the long-awaited response to the Royal Commission into violence, abuse, neglect and exploitation of people with disability comes 10 months after the final report just showed how terrible the situation was. Human rights was at the centre of the landmark report, recommending urgent reforms across housing, education, health, employment, criminal justice and disability services to make Australia a more inclusive society. The principles the government agreed to in full include a review of the National Disability Strategy, improvements to the employment services model, and transition guidelines for NDIS participants entering custody and returning to the community.
ANZ has officially taken control of Suncorp's banking operations after a 743-day, $4.9 billion saga.
I'm sure it's a relief for both ANZ and Suncorp, this one. The deal was initially rejected by the Australian Competition and Consumer Commission. That decision was reversed after ANZ appealed it. The Melbourne-based bank now becomes a much bigger player in home mortgages, particularly in Queensland. The Brisbane-based Suncorp becomes a pure insurance play, thus ending the only major player left in the bancassurance trend started a few decades ago when I was first a banking writer at the Financial Review. It was all about bancassurance, banks and insurers working together. Well, that's fallen away. ANZ has plenty on its plate. Obviously, it has Suncorp's banking operations now, but it's also under pressure on the back of the bond trading scandal that's hit the bank. Its job now is to deal with that scandal while it integrates Suncorp's customers to ANZ. I think I'll leave it to the share market to have the final comment on this deal. Since it went through, so since the appeals tribunal agreed to it, ANZ's share price is up 6%. Suncorp is up 25%.
Well, there you go. One more, Sean. Westpac customers will be able to speak to staff at their bank via its banking app using a verified call in a move that the company hopes will help reduce the hundreds of millions of dollars that Australians are losing to banking scams every year.
In a bid to block ever more sophisticated impersonation scams, Westpac will roll out a new security product in partnership with Optus that allows customers to receive Westpac branded calls via the bank's app, which is used by 3.6 million people each month. The calls, which will be verified by Optus, will also show the reason for the bank getting in touch with the customer, according to a report in the Sydney Morning Herald and Age. Westpac Chief Executive Peter King said it should provide customers with the confidence and added security to help beat scammers and know that they're actually talking to their bank, not someone trying to scam them. ASIC estimates that in 2023, more than 31,000 banking customers had between them lost $558 million. Interesting story, because you and I were just talking about this in the last 24 hours, just how many scams you get each day, how many phone calls you get each day.
It's actually reached the point, Sean, where I reckon I get more scams than legitimate phone calls now.
But you don't have many friends, Michael.
Thank you for reading between the lines on that one, Sean. Quite savagely as well.
Harsh.
Goodness me. This seems like a good move, though, doesn't it? I mean, it's anything that's going to help reduce the number of people who are actually being ripped off by scammers has got to at least help.
Oh, totally. I mean, you hope so. It's to the point when you don't know the phone number on your phone, you tend not to answer, or I tend not to answer it. And it's a real problem. I like the idea of some of Westpac getting in touch with me via my app.
Yeah, just adds that little bit of extra security. Now, turning to international news now, the crisis in the Middle East is escalating after Israel said it had killed a senior Hezbollah commander in an airstrike on Beirut and is suspected of assassinating the leader of Hamas in Iran.
Israel said the operation in Beirut was retaliation against the individual responsible for a deadly rocket attack on the Israeli-occupied Golan Heights last weekend. The Israeli military said Fawad Sukur died in the attack on an area of southern Beirut that is a Hezbollah stronghold. The Israeli Defense Forces described Mr. Sukur as Hezbollah's most senior military commander. Now, the strike marks the first time Israel has targeted a Hezbollah figure in Beirut since hostilities erupted between the two sides after the Palestinian militant group Hamas launched its attack on the Jewish state on October 7. Also yesterday, the leader of Hamas, Ismail Haniyeh, was assassinated in Tehran. No one immediately claimed responsibility, but suspicion fell on Israel. A Hamas official said its chief's assassination is a cowardly act that will not go unpunished. Both incidents come as the US continues to lead diplomatic efforts to de-escalate the situation, but at the moment it is very, very close to erupting into a major conflict.
Sean, growth in Microsoft's Azure cloud service business slowed last quarter, disappointing investors who are anxious to see a payoff from huge investments in artificial intelligence products.
Total revenue in the 3 months to the end of June increased 15% to $65 billion US. That's nearly 100 billion Aussie dollars for the 3 months. But the Azure cloud computing service has been Microsoft's main engine growth, and it's slowing. At least the pace of growth is decelerating from 31 to 29%. Great numbers, still, I agree, but Wall Street investors want exceptional numbers at the moment. Microsoft's shares fell about 6% in extended trading. Alongside peers such as Amazon and Google, Microsoft has been constructing new data centers to meet demand for cloud computing and power-hungry AI services. But in recent weeks, investors have been less patient with tech companies' efforts to make money out of their cloud computing and AI investments.
All right, very big day. Up next is the Fear and Greed Daily interview. Your guest today is Gareth Aird from the Commonwealth Bank.
Yeah, primarily about what happens to interest rates. Now we got that inflation data yesterday where the underlying inflation was slightly lower than expected. Gareth, he tells us what he thinks will happen and when he thinks the next interest rate cut will be.
Yeah, it's a great chat. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget to keep an eye on your playlist around about midday today for the next installment of Ask Fear and Greed with a cracker of a question from a listener by the name of Duncan. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 1st of August, 2024. Make sure you're following the podcast and please join us online as well on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson. That was Fear and Greed. Have a great day.